Welcome back, everybody. So today we're going to be talking about traveling as well as Bitcoin. Now, I have recently been having a little bit of a long-winded debate with somebody on Instagram just in relation to Bitcoin, and it's probably about 150 comments long, this one specific thread. But it's been really, really good just in terms of understanding the pain points or just the questions what a lot of people have in relation to Bitcoin. And I just thought I would address some of them in this video. But first of all, I wanted to talk about traveling, about why traveling can be very, very important just in regards to getting perspective for different types of investments. Now, at the moment, I am currently in Malaysia. Now, I will show you where I currently am. It's really, really cool, Malaysia. And the thing is, I think it's probably one of the most countries in the world, just in relation to amenities, cost, just absolutely everything. And a lot of people don't really come here because they typically go to either Thailand or they go to Vietnam. Now, the reason why I believe traveling is massively important just in regards to getting perspective on different types of investments is because you can see how different types of cultures interact from a technological perspective, finance perspective, just absolutely everything. And obviously, if you see one trend in one specific location, most likely that trend will roll over into another jurisdiction, another location, etc. And obviously, if you can see them trends before anything happens, then you can make a significant amount of money as a result. So I really do think that going traveling can really help you broaden your mind when it comes to investment opportunities and just everything in between, really. Now, Malaysia, for example, is a very, very, very interesting country because everyone here is just super sweet. Like, I really do like Malaysia, to be honest with you. There's a lot of really cool people here. I've got a few friends who are here who are really, really awesome, super chilled people, and they are really, really friendly. Now, you might be asking, what am I doing in Malaysia? Now, I am currently in Malaysia because I think there's a great opportunity in regards to buying property here. Now, so I am currently building out relationships with people who have property here, different types of real estate agents, mortgage advisors, etc., to hopefully buy distressed assets from Chinese investors. Now, that might sound a little bit wild, but I think it's quite a good exercise to actually do. Now, the reason why I'm currently doing this is because there is a vast majority of investors in Malaysia who are Chinese. Now, if they are forced to liquidate for whatever reason, and they're forced to sell some of their properties, you want to be buying these assets at cheaper, desirable rates. Now, obviously, there'll probably be an issue in terms of lending, in terms of credit, and a lot of other things probably going on at the same time. Now, again, I am just speculating, I am just anticipating this happening, but I want to make sure that I have the correct foundation for when something like this does happen. So, again, I am in Malaysia to build out some investor connections, obviously get exposure to property, get exposure to brokers, etc. So that is what I'm currently doing here. Now, an interesting fact is that about 40% of properties in Malaysia are currently owned and operated by Chinese investors. So if this thesis does start to play out, there will probably be a lot of stress in Malaysia, and you will probably have something called contagion, or like knock-on effects from the impacts of what is currently going to be going on in China. Now, again, I'm not saying that this is going to happen tomorrow or next week or anything like that, but I am just anticipating, obviously, some stress in the Chinese market. And as a result, I think there'll be opportunities elsewhere where you'll be able to get exposure to property, get exposure to different types of assets. And that is the reason why I'm currently here. Now, again, just touching back onto traveling, I do think it's massively, massively important to get exposure to these different cultures, to these different countries, because it will allow you to have a broader mind when it comes to assessing different types of investment opportunities. There'll be businesses what are happening in Asia, what are significantly good businesses, what wouldn't necessarily work in the US, and vice versa. And you want to have a good understanding of how different types of cultures adapt to different types of technologies. I mean, I'll give you an example. Like in Asia, probably a lot of people don't really know this, but you have apps like Grab. And Grab, you have Grab, you have Food Panda, and a few other different types of apps. Now, Grab is pretty much a mix between Uber Eats and Uber, and there's a lot of kind of apps in one inside Grab. And the thing is, a lot of people massively use it. There's wallets on there as well, what a lot of people are using in terms of payments. Now, just on Malaysia, not necessarily Malaysia, just on Indonesia. In Indonesia, a lot of people use their phones in terms of sending money to, let's say, shops by scanning QR codes. And when I first saw that, I was a little bit shocked by it because I didn't really anticipate, obviously, people scanning QR codes to send payments. But the reason why I found it very, very fascinating is because of how you send payments using Bitcoin on layer 2 with Lightning payments is obviously through scanning QR codes, etc. Now, this would be incredibly, incredibly foreign for somebody in Europe, for somebody in the US. I mean, in the US, you're still swiping cards and signing stuff. But in Asia, you typically don't have that type of culture. You kind of scan a QR code, you send the money, and that's pretty much it. Now, when I start to think about a Bitcoin adoption or countries what might be potentially adopting a Bitcoin standard, I think that Indonesia could be a good contender because a lot of people who are in Indonesia are already using QR codes in terms of sending payments. So I think that was just really fascinating what I kind of came across, especially when I was traveling Indonesia and meeting a few different business owners and investors. But also as well, just on the traveling side of things, again, it helps you understand how people behave with their phones, what type of apps are they currently using on their phones and on their devices. Because again, it's something what might be trending significantly in Asia will most likely be tried to copied and brought over to the US or brought over to Europe and vice versa. So understanding these technological changes can massively help you in terms of getting in early to different types of investments. So that is why I would massively encourage to broaden your horizon when it comes to traveling and getting exposure to these different types of cultures and countries, because it can significantly help you. I mean, you're just touching on Indonesia again. Even when I was just there, like the amount of people who are on TikTok in Indonesia, they're literally sat in let's say a wooden hut or whatever, and they're all on their phones scrolling. And again, just going back to CPMs and advertising, this is why it's significantly cheaper to get, let's say, Indonesian followers than it is to get United States, you mean people from the US or people from the UK or Europe, etc. Because the culture is not really sat around majority of the day scrolling, because that is the only form of entertainment, what it seems like in different types of villages and parts of Indonesia anyway. So again, it's just very, very fascinating just how people interact with technology and how you could be, let's say, capitalizing on that just in general. Okay, so the second point, what I want to talk about is just in relation to Bitcoin. Now, I have been receiving a significant amount of messages, comments, and everything else in between, really, just about Bitcoin, quantum computing, illicit activity, energy usage, hackability, just in relation to wallets. And yeah, I just thought I would just kind of jump on and just kind of give my 2 cents just in relation to Bitcoin. Now, to give you some background on me, I have been in the Bitcoin space for a number of years. I've probably spent the best part of about 50,000 hours just in terms of studying this technology. Now, there's a lot of moving parts with this technology, and there's a lot of areas what you can kind of talk about for a significant amount of time. These can be nodes, these can be miners, these can be obviously just the overall Bitcoin network in general, and Bitcoin the asset. Now, the network and the asset are two very different things. Now, I do just want to kind of address the illicit activity comment. Now, a significant amount of people just keep saying to me that Bitcoin is being used by criminals, and a lot of criminals currently use Bitcoin. Now, you can make the same type of arguments for roads, for the US dollar, for euros, for pounds, for basically anything, that you are always going to have a few bad apples who are using technology for illicit activity. Now, again, does this mean that obviously roads or the US dollar is significantly bad? No, it just means that there's a significant amount of people who will be using that as a medium of exchange when it comes to criminal activities. Now, the only thing what I would say is that it's probably easier in terms of doing illicit activities through the US dollar, through the pound, through the euro, through any other different type of currency. And the reason why I say that is because Bitcoin operates on an open public blockchain, what basically means that wallet addresses are public, meaning that if you have something what connects your, let's say, identity to a public address, obviously you'll be subject to criminal charges, obviously if you can kind of tie everything together. Now, just on the blockchains in general, you do have companies who use something called watchtowers. I think they're called watchtowers. I'll put it on the screen anyway. But these are pieces of software, and these are companies who are trying to screen for illicit activity. So now, if you are going to be doing any criminal activity, it's probably not the wisest thing to be doing it on a public, decentralized blockchain, because obviously that transaction is going to be there for eternal, because everybody can see that transaction. And obviously, if anybody can tie your identity to it, and obviously what that payment was actually used for, then you will be obviously subject to them charges. So that is just on the illicit activity. Now, just in relation to the energy usage, now this comment is being thrown around a significant amount. And even though Bitcoin does use a significant amount of energy, it probably uses the same amount of energy as the entire country of Argentina. Now, saying that in isolation sounds absolutely insane. But when you start to consider how much energy does other different types of, let's say, technology systems currently use, or let's say just ATMs in general, when you start to think about how much energy does ATMs use globally, or how much energy does Christmas lights use, or let's say just offices in general, what are not necessarily being used, or street lamps or whatever, and you can kind of justify, is it really useful that we have an ATM on 24 hours a day when the ATM only gets used for, let's say, 2 hours of the day in different types of locations or whatever it is. And again, you have all of these different types of, let's say, arguments what you can kind of do just in relation to Bitcoin. But just on the energy usage of Bitcoin is not necessarily using the sources of energy just in relation to an ATM. And let me kind of give you a little bit more color around that. So Bitcoin mining businesses are incentivized to use the cheapest source of energy on the entire planet. So you have a variety of different types of, let's say, Bitcoin mining businesses who will try and source the cheapest source of energy on the entire planet, because this will help them reduce their margins, what ultimately allows them to mine a Bitcoin at a significantly cheaper rate in comparison to their competitors, because the Bitcoin network rewards the most efficient miner who can solve the block the fastest and ultimately at the best price possible. And again, just going back to this whole idea that obviously Bitcoin uses a significant amount of energy, yes, that is true, but a lot of these miners are using renewable energies what are stranded in different types of jurisdictions. So I know a lot of miners who are currently operating in Texas, and they're utilizing a lot of, let's say, renewable energies in Texas, from solar, from wind. I do know a lot of mining businesses who are operating in Alberta in Canada, and they're working in collaboration with different types of oil companies. Now, the reason why I say this is because why would an oil company be wanting to collaborate with a Bitcoin mining business? Is because they complement each other significantly well. Now, for example, if you are fracking for gas in, let's say, Alberta, and when you frack for gas, you have to flare off some of that gas, and that gas, because you don't have the infrastructure to pipe it anywhere else, you basically just burn it. But when you burn it, you are subject to, let's say, environmental charges and taxes, and all everything what comes with that. So what a Bitcoin mining business can actually do is that they can bolt on to a oil business. They can capture that flared energy and convert that flared energy into electrical energy and help them mine Bitcoin with it, what will massively reduce their overall overhead when it comes to mining profitability. So you can get access to very, very, very cheap energy for, let's say, a penny per kilowatt, rather than if you are mining in, let's say, the UK, for example, the cost per kilowatt is about 24 cents per kilowatt. So you don't really want to be doing, let's say, Bitcoin mining in the UK, because you don't have an advantage in terms of doing the Bitcoin mining in the UK in relation to going down the renewable energy route. So you'd be pushed out further and further just in relation to renewables and cheap sources of energy. And again, this is why you have a lot of countries who are very rich in resources who could be massively tapping into this entire new technology, because it would significantly help them in terms of generating revenue for their country, especially if they are sat on a lot of natural resources. Now, I know there's a few Bitcoin mining businesses who are doing a lot of work with renewable thermal vents in Iceland. I know there's a lot of businesses who are doing a lot of work with thermal volcanic energy in El Salvador. So again, there's a lot of things what the vast majority of people don't even realize, and a lot of this energy is stranded and they don't have the infrastructure in terms of piping it back to a power grid. Now, just on a power grid, a Bitcoin mining business can help stabilize the grid by basically switching off and on their machines dependent on the load of the entire grid. Now, in Texas, they are currently doing a lot of this where a Bitcoin miner would be paid to power down. So a lot of the population inside Texas can absorb a lot of that energy in terms of, let's say, if you wanted air conditioning to be more aggressive, you can power down some of these Bitcoin mining businesses so you can take, obviously, the capacity away, what obviously would push that back into the society. Then obviously when the population doesn't necessarily need that energy, the Bitcoin miner would switch back on and then they would obviously mine Bitcoin with it. And you can have software what can kind of work out the profitability of switching on and switching off. So again, a lot of these miners are very, 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 very cost efficient in terms of utilizing energy, in terms of margin operation. And how do I know all of this? Like I said, I've been in this space for a significant amount of time. And this whole idea that Bitcoin uses a significant amount of energy, even though that is true, what a lot of people need to realize is that where does that energy come from and what is the source of that energy? Because going back to that statement, what I was saying before, a lot of these Bitcoin miners are not incentivized to use the energy what comes out of let's say a residential building or a commercial building. You need to be going where there's very, very, very cheap stranded resources of energy and ultimately capturing that energy and then converting that from physical energy into digital energy, what obviously is Bitcoin, and then obviously you can sell it on the open market. And this is why you have this great reciprocal relationship between Bitcoin mining businesses as well as energy companies. And I think we'll see more of that over the next couple of weeks and months. So that is the energy debate kind of out of the way. That is also the illicit activity debate out of the way. Okay, so let's address the third point, what is quantum chips? Now, this debate is quite interesting really because I understand the logic behind it, because obviously a quantum chip does have the potential in terms of hacking into a lot of, well, a significant amount of systems, and it would basically make all security globally completely redundant. Now, let's say you do have access to a quantum resistant chip. Now, would you really be going after a decentralized protocol such as Bitcoin, or would you be going after a more centralized system such as the stock exchange, such as banking infrastructure, such as communication, military communication, and everything else? You know, it wouldn't make logical sense why you would want to broadcast it to the world in relation to hacking it into Bitcoin if you did have the ability to be able to hack into Bitcoin. Because even just doing that as well, what a lot of people don't really realize is that you do need to have the scale when it comes to energy, and you also need to have the scale when it comes to the compute and the chips. So you do need to have the energy. And again, attacking Bitcoin, you basically need the entire, let's say, now attacking Bitcoin from an energy perspective, you basically need the entire energy of 2 Earths to basically attack the entire network. Now, obviously, getting access to that amount of energy can be very, very difficult to do. I mean, you would probably need nuclear energy or something along them lines to be able to basically power an attack of that scale. And obviously, when something like that comes online, you will be able to see it you'd be able to see it massively. You'd be able to see it instantly. But again, if you wanted to attack, let's say, a grid infrastructure, or if you wanted to attack a financial network or anything else, it would be a lot easier to do that type of attack than it would be to do it against a public decentralized system or a protocol such as Bitcoin. So again, the whole quantum computing debate, I understand it. And again, there's a lot of people who are massively incentivized to make quantum resistant Bitcoin wallet addresses. So the community is very much aware of this in terms of a security risk. And obviously, as you can probably imagine, the community is obviously adapting to this risk and obviously getting things in place to kind of deal with it. Now, again, going back to this whole argument, it would make more logical sense that if you wanted to do a lot of havoc in relation to a quantum computing chip, that you would attack other different types of systems rather than just attacking a decentralized one. Now, obviously, the manufacturer of a quantum resistant, let's say, chip, and people saying, oh, well, Google's going to create it. Now, obviously, if Google creates a quantum resistant chip, it would probably hack into all of their infrastructure anyway. So why would they, let's say, broadcast that anyway to the world? And again, it would completely cannibalize their entire business anyway if they did publicize it. So again, it's a little bit, I think it's a little bit premature and a little bit naive just to think, oh, as soon as somebody gets a quantum computing chip, that they have the ability to be able to to be able to hack Bitcoin when you have a significant amount of other, let's say, implications outside of just the Bitcoin argument. You have obviously you have the entire financial system, banking system, and absolutely everything. So there's a significant amount of risk across all security protocols just in general, because all of them security protocols can be massively exposed, obviously, with a quantum computing chip. So let's address another point. What is just in relation to the government in terms of banning it, or the government getting access to your coins, or do you mean like a 3-letter agency being able to get access to your Bitcoin, blah, 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 blah. Now, these stories are typically all around, let's say, different types of phishing attacks, meaning that it's all to do with the user, meaning that the user has not necessarily been that aware in terms of storing their seed phrase or storing their wallet address, or they've left their phone unlocked, or do you mean there's a lot of, let's say, human error just in general. And the reason why I say a lot of it is to do with human error is because the protocol in general has not necessarily been subject to a hack. Now, when it comes to public and private keys, these public and private keys have not been hacked in the history of Bitcoin. A lot of it is all in relation to the individual, meaning the individual has not necessarily taken the correct security steps in relation to protecting their seed phrase and protecting their phone or protecting their wallet address or whatever. And again, this is how people get access to your Bitcoin, and this is why you hear a lot of people say, oh, well, the government stole, or the government got access to this amount of Bitcoin. Now, the reason why, let's say, an agency might be able to get access to the Bitcoin is because the seed phrase is in a public domain, or it's left on a phone, or it's taken a picture of it, or whatever. So, this whole idea that people can get access to your Bitcoin by basically hacking into Bitcoin is, again, very, very, very misunderstood. And a lot of the reasons why a lot of people get hacked is all to do with human error. Again, going back to this whole thing, you have different types of hardware devices where you can kind of have, it's called like air-gapped devices, where these devices don't touch the internet, because, again, a lot of Bitcoiners are incredibly, incredibly paranoid in terms of what a computer can kind of get access to. So they would, let's say, switch on their hardware devices with a battery what's not connected to the internet or anything like that, and then they would sign the, let's say, transaction with a SD card, and then put it back into the computer and then broadcast it to the actual network. And again, this might sound very, very complex, and again, it is a little bit complicated, but again, I mean, these people really pride themselves in terms of understanding the Bitcoin protocol, as well as understanding what it means from a personal sovereignty perspective. So again, it's like a lot of people don't really realize that an exchange as well has access to your private keys, meaning that the exchange, you don't really own the Bitcoin, the exchange owns the Bitcoin. And this is where this saying comes from, not your keys, not your coins. And this is just all in relation to, if you are not, let's say, holding your keys, this is just in relation to if you are not holding your coins in a private cold wallet and you don't have access to the keys, obviously it's not necessarily your Bitcoin, because on an exchange it's not really your Bitcoin, because this is why you have issues with FTX and all of these other different types of hedge funds and exchanges what had a lot of paper Bitcoin, and then when it kind of came to, let's say, withdrawing the Bitcoin from them exchanges, they didn't necessarily have access to the amount of Bitcoin what they were displaying, and this is when you have a lot of liquidity problems, what ultimately impacts the overall Bitcoin price. Now, just on the price action from a volatility perspective, a lot of people keep saying, why is the price so volatile? And the price is significantly volatile because, again, it's like any, let's say, emerging technology. There's going to be a lot of volatility as this thing starts to get traction, and most importantly, as a lot of people become more aware of its value proposition, what it means from a personal sovereignty perspective, what it means from an international remittance payments perspective, what it means from an energy perspective. There's a lot of different value propositions what Bitcoin can do for different types of industries, what, again, a lot of people don't even realize. And again, just going back to the whole energy argument, again, a lot of oil companies can see a Bitcoin mining business be accretive to their business because they are basically selling energy for, it's like money for old rope, right? It's like you're going to waste that energy anyway, and now you've got a buyer who can basically buy that energy off you for a penny. You might as well get a penny than get zero. So it's a very complementary business to the energy sector. And again, a lot of people don't even realize it, and there's different types of value propositions for different types of cohorts of people. And the reason why the price goes up and down quite significantly is all to do with obviously macroeconomics, all to do with how people feel about the overall assets, their understanding of the overall assets, of where they currently sit. And again, people trade it, people get in and out of it, people get blah, 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 blah. And this is another thing as well, just in relation to the trading and the holders of Bitcoin. I've had a lot of people say to me, oh, well, there's a lot of whales in Bitcoin who hold a significant amount of Bitcoin, etc., etc., etc. And the thing is, what I would say in terms of this argument is that you have the same, let's say, argument just in relation to any other different types of asset class. You are always going to have a significant amount of whales in any asset class, in property, in stocks, in gold, in commodities, obviously in Bitcoin. Now, the only thing what I would say is just in relation to the Bitcoin argument is that if a whale does decide to sell, that is going to have a significant impact on the overall price, but it is also going to have a significant impact on the overall price if they get back into it. So what a lot of people don't really even realize is that when you sell something and let's say you go to cash, you then need to put that money to work somewhere else. So where is that money going to go? Is it going to go into altcoins? Is it going to go into property? Is it going to go into gold? Is it going to go wherever? I mean, you are stuck with another dilemma. What is, where are you going to put that money on what can get a certain level of return and what is not necessarily going to be subject to currency debasement? So again, going back to this whole argument of, oh, there's a lot of whales in Bitcoin, there's a lot of whales in other different types of assets. And granted, if a whale does decide to sell for whatever reason, if they need a new yacht or whatever, obviously that is going to impact the overall price. But the thing is, the price is only volatile in the currency what you currently see it. So again, what I find very, very, very fascinating is that if you view Bitcoin from a pound perspective or a US dollar or a Turkish lira or a Mexican pesos, the price and fluctuation is significantly different because of the currency what you currently view it in. Now, if you view Bitcoin in Bitcoin denominated, you mean one Bitcoin is one Bitcoin, right? The price doesn't actually fluctuate. And again, when you, let's say, divide Bitcoin by the ounces of gold, again, it's very, very, very different in terms of the price volatility and the overall, let's say the overall movement, again, because you are viewing it in a completely different lens, and that is where the volatility comes from. And again, people are very subject to look at things from the lens what they have been born into, or the system what they've been born into. What is the US dollar, the euro, the yen, or do you mean or whatever you want to, do you mean the pound or whatever? And again, the volatility is not necessarily I don't think it's a bug I wouldn't necessarily say it's a bad thing. I would say volatility is a very, 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 very good thing, because the volatility is what creates the opportunity. And the opportunity is basically people who do not necessarily understand what they own and why they own it. Because as the price starts to go down and a lot of people get very, very nervous, I start to get very, very excited, because I want to start to see a lot of fear in the market, because that is where great buying opportunities typically come across. And this is where you typically have great buying opportunities, is when you have a significant amount of fear in the markets. And typically you have a lot of liquidations. I mean, we saw this in FTX, 3 Arrows, and this is when it was like 2022 or 2023, somewhere around there anyway, where obviously the price compression of Bitcoin went down significantly. And a lot of it is to do with liquidations. And you typically don't see the same level of, let's say, violent price movements in the stock market. And the reason why is because the Federal Reserve basically comes in and basically prints money, what basically props up the entire market. Whereas in Bitcoin, and obviously, let's say, different types of crypto assets, it's very much a free, open market, meaning that there's no backer, there's nobody who's going to save you. So if you get over collateralized or over leveraged or whatever, and you get liquidated, you are forced to sell your Bitcoin at whatever price, and obviously that has a significant downward pressure on the price, and obviously on the upside as well. So again, there's a lot of moving parts with Bitcoin, and like I said, I do understand this space significantly well. I've been in it for a hell of a long time, and I would just say, just on Bitcoin, just in general, I think what is very interesting to pay attention to is just how to view Bitcoin. Now, I like to see it as a book, meaning that there's a book what has been distributed around the entire world, and every single 10 minutes a page gets added to the book, and in that page there's about 400,000 transactions. And that page gets added to the book, and everyone around the world basically says, have you got the same book? Have you got the same book? Have you got the same page? Yes. If yes, we add it to the blockchain, or we add it to the book, for example. And again, just look at that page as a block and the entire book as a block, well, the blockchain. And that is a very good way to kind of analyze in terms of what is currently going on. Now, again, there's another argument in terms of the block size wars. Now, there's a book called The Block Size Wars. I'll put it on the screen now so you can kind of see it. But this is just in relation to the block size of different types of let's say pages. So when the page gets added to the book, rather than doing 400,000 transactions, you might want to do, let's say, 7 million per page. But obviously you have implications in terms of storage, in terms of processing and everything else. And you are there's a lot of moving parts to that. I can probably talk about that for probably like 2 to 3 hours. But basically in the block size wars, you have this massive debate in terms of the size of blocks or the size of the pages and the size of the transactions. Now, there is different layers to Bitcoin. You have something called the Lightning Network, and the Lightning Network allows you to do a significant amount of transactions very, very, very quickly, and you can kind of bulk do the transactions or add the pages later on down the line. You can kind of like bulk them all together. I mean, it's probably going to take me 45 minutes to explain the Lightning Network, but basically just imagine it that you have different types of layers of technology, what is built on top of the base layer. And just think of this in relation to the internet. You have HTTP, HTTPS, SMTP, POP3, and these are all different types of protocols on the internet. And obviously on the internet, you have different types of applications, what are typically built. And obviously you have Facebook, you have Instagram, you have WhatsApp, you have Google, eBay, etc. And these are all using different types of protocols and different types of languages, what are built on the base layer, what is HTTP, HTTPS, SMTP, what is the email side of sending an email. And again, just going back to the whole Bitcoin, think of Bitcoin as a decentralized protocol, what allows you to transfer value over time and space, very much like how you would send an email. And obviously, depending on how you access your email, you're all using the same base layer, meaning that you are sending email through something called SMTP, what is a protocol in terms of how you send email. Now, it doesn't necessarily matter if you use Yahoo, if you use Gmail, if you use Hotmail, if you use Outlook, or whatever. Like, it doesn't really matter what you kind of use as your browser agent in terms of accessing and receiving email. What matters is the underlying protocol and the underlying foundation and the pipes in terms of how you send them emails. What obviously is SMTP. So just think of Bitcoin as a decentralized protocol, and you have a lot of moving parts from a mining perspective, from a node perspective, and from an energy perspective, and just from a overall consensus as well. Because so just going back to the page analogy, what I was talking about before. Now, when a page gets added to the book, the miners who help facilitate all of them transactions, they get rewarded for obviously facilitating and putting that page together. And at the moment, it's about 3.25 Bitcoin every 10 minutes per page. And every 4 years, that reward, that page reward or block reward, it gets cut in half, and that is called a halvening event. And this basically happens until, I think it's like 2140 or something along them lines, but well, that's the year. But again, you have rules inside Bitcoin, what again are very, very, very rigid. Again, they do not change, not necessarily like the current financial system where everyone is waiting on what the Fed is going to say, what central banks are going to say in terms of interest rates, in terms of this, in terms of that. From a Bitcoin perspective, the only thing what is certain in a very uncertain world is Bitcoin. And the reason why I say that is because, again, these rules are written into the code and no one can change them. Because if you wanted to change them, you can create your own, let's say Bitcoin, you can create your own fork. And what that basically means is, just think of it like this. You want to create a different version of eBay, okay, for example. Now, when you want to create that different version of eBay, you might want to be able to, let's say, sell different types of products of what eBay currently lists or whatever. So you duplicate the entire code base of eBay, and you call it eBid or whatever you want to call it, right? Now, on eBid, you've added all of these new features, and this would be called a fork. From a Bitcoin perspective, you've added all these new features, and this could be classed as, let's say, Bitcoin Cash or whatever, and they have different types of, let's say, attributes or different types of features what are different from the original white paper. And this might be the block size or the amount of transactions what currently get processed. So going back to this whole, let's say, eBid example, what a lot of people don't really realize is that you need network effects for systems and technology to grow. So even though you might have duplicated eBay and you might have something called eBid, what you don't have is you do not have users, you do not have scalability, you do not have, again, people who are very aware in terms of how that underlying technology, you don't have the apps, you don't have anything kind of integrating into it. So again, even though the fork might be better, if people do not jump over to that area or to that new version, the protocol is not really going to do that well, because you need users and you need this whole network effect. Again, going back to, let's say, not eBay, but let's say you go back to Facebook. Think about Facebook with no users. If there's no users, there's no value. And the more users you have, the more valuable it is in terms of you joining, because again, you get access to all of these people. So you have this massive network effect between like a chicken and an egg. And it's very much the same when it comes to Bitcoin. Bitcoin has the deepest amount of users, the amount of people who are actually integrating into it. And again, you have from a technological perspective, you could kind of say a lot of people who are kind of building on top of Bitcoin are kind of building it from a API perspective. Just think of it like that in terms of doing integrations. And this is kind of, let's say, thinking about it from a login perspective. Let's say if you're building a piece of software and you want to, let's say, log in with Facebook, whatever, rather than logging in with your username and password, you can just log in with Facebook. And the amount of people who use login with Facebook across the world in terms of their applications or whatever, again, it's a seamless experience. And again, going back to the whole network effect, it's very much the similar thing when it comes to Bitcoin, because a lot of people are very used to using Bitcoin as the foundational layer. And there's a lot of things what are built on top of Bitcoin. So again, it's a lot easier to join the network than it is to, let's say, do something similar, because again, you do not have the network effect of the underlying protocol and the users. So I'm basically going to leave it there. I mean, I can probably talk about, obviously, Bitcoin for the next 6 or 7 hours and just everything what I've been doing just in relation to Texas, Canada, obviously looking at different types of Bitcoin mining facilities in Iceland, obviously in Southeast Asia, in Vietnam, in Kazakhstan, and everything. I mean, I do know this industry incredibly well. So if you do have any questions or anything like that, please leave them in the comment section down below. Now, I have probably butchered a few of these explanations, and again, if you don't necessarily have a technical background, I do apologize, because I'm trying to obviously make something what sounds I'm trying to explain something what can seem very overwhelming and very complex. I'm trying to distill it down into very easy, digestible ways for people to understand. But if you do not understand anything, please leave it in the comment section below. I do reply to every single message. And yeah, hopefully this has been informative. And yeah, to the 4 people who keep on supporting me, I hope you're having a lovely day wherever you are, and I'll see you soon. Take care. Bye-bye.